Okay, brilliant. Hi, welcome guys to the Solid as a Stock, hopefully clue is in the name, what we're going to go over today. So we'll start with what we normally do, which is kind of introduction, disclaimers and things like that. And then we will get into looking at the charts, seeing new opportunities that might present themselves today. There may be nothing, there may be loads, obviously depends on what we see on the day. And we'll go over what we did last time as well. So let's just do a quick intro for those that might be completely new and you don't know how we do things. So my name is Becky. I know my head is in the way there of my email address, but the email address is becky@traddictiv.com. There's also this link here, tradewithufos.com/Becky. I don't know why my arrow is very big. I'm going to try and sort that out. So tradewithufos.com/Becky brings up, if I just move that, brings up this page here. Now this page allows you to sign up for a free Trade with UFOs membership. Once you have that free Trade with UFOs membership, you'll get email reminders of the YouTube sessions that we do, recordings of the YouTube sessions that we do, a newsletter kind of thing every morning where it will explain 5 of the major markets in the world and the probabilities either up or down and specifically where on those markets. And this is the most important thing I think, you get to ask questions in a public space. Now, why is that important? It's because it helps the entire community to learn from each other. So you come here and perhaps a question that you're wanting to ask has already been answered because we answer publicly as well. So you'll have the answers there. Or you might have a question that's new, in which case you asking that question is something that somebody else might learn from later down the line. So hopefully that makes sense. Now, once you've signed up for it, like I said, you're just going to fill that in there, go through, fill in the steps. Then you can ask questions. You'll also get those emails and things. So just going back to our main screen for a second, I'm just going to make sure that we cover our disclaimers. So they're being highlighted there. Now it's important that you guys understand that whatever videos you watch that we produce, whether it's stocks, futures, forex, options, the market commentaries that we do, all of these are demonstrations as to how we do things and how we think about the markets, not indicating in any way that something you should do. You can ignore it entirely. You could take it on board entirely. You can do something in between. Ultimately, it's up to you as a trader to figure out what works best for you, and try and test different theories and see what works. So for us, we're going to go through how we do things. Let's give a very brief introduction again for those that might be new, never watched one of these before. Our stance, if you want to call it that, when we look at the markets is to try and be as objective as possible. So especially when it comes to stocks, a lot of people are used to maybe looking through, I don't know, reports, employment, profits, basically company information to decide whether or not a stock is worth buying or selling. Now for us, we're not saying don't do that. You can if you want to. You could layer it on top of what we do or do it instead of what we do. For us, that's not something that really comes into it. And the reason for that is because we want to be objective. Interpreting data about a stock, interpreting information about a stock can lead to more subjectivity. The markets move whether or not you want them to. The markets move whether or not you think they're going to. And so being subjective can sometimes cloud what we're trying to do. Now, being objective means we want to try and remove as much bias as possible. We want to remove as much filtering through a human filter of the way that we think as possible. And so we use technology and apps to help us be more objective about the stocks that we do buy or sell, and specifically where we buy and sell them. That also applies to forex, options, futures, cryptos, all markets really. So that's kind of the approach that I'm going to take today. Not to say don't do those other things if you find that to be useful. Maybe you can layer it in, but I'm basically setting the scene that that's not something that I'm going to really be talking about in these sessions. Now, just to explain, because you may be watching this on, so obviously we said hello, you may be watching this on YouTube or Facebook or other sort of free, maybe social media platforms. And obviously you have access to watch these things recorded and stuff for free on those platforms as well. Now, we do have a separate form of coaching, which is a paid for coaching. It's more of a closed environment. People get more of our time. And so what we do when we simulcast these things is somewhere along the middle of the video, we will stop streaming to those free platforms and continue to stream in that closed environment. Now, we try and be fair. We don't want it to be that those of you that are watching for free just get the intro and that's it. You will get, if we can, depending on the opportunity that is available, we will go through and find a trade. Once we've found one trade is when we'll cut that stream. So you still get the process, the methodology, and a trade. And then from there on, the people that are within our closed coaching community will get access to more trades that we can go through. So we try and make it sort of fair in between so that, those that get it for free still, of course, get something from it. And those that are paying for it get slightly more for it, of course. So it may be that we don't find any trading opportunities, in which case we'll go right to the end. Just based on what the markets have to give us today. It may be that we find one within the first 5 minutes, in which case it's a shorter video. But so it's not a set time that we do it. It's based on the content that we deliver to make sure that you get the most from it. So again, hopefully that makes sense. I know I spent a little bit of time now just explaining things without going into the market, so I will continue now. Okay, so first things first, let's have a look at what we did last time. So last time, this was a stock that we put on. This was Scalar, that's how you say it, Scalar. So again, just to reiterate what I was saying, I'm not even sure how to pronounce this particular stock. Doesn't matter, because the reason that I chose to set a trade for this stock has really nothing to do with the company and everything to do with the probabilities, the statistics, and the technology. Again, you can layer in fundamental analysis as well. Why not, if that helps you, if you find that to be helpful. So what we saw here is, I don't know how to quite scroll this down and get a small, it's disappeared now. So I'm going to have really giant arrows for this one. I don't know what I've done here, but my arrows are gigantic. So that's going to look a little bit funny, but at least it'll be obvious what I'm pointing at. Huh? So we had a trade that was here. The entry was 178.02. and our stop was 173.43. We had targets at 182.61, and I think we had a trailing target for the next one. Now, as we can see here, price never came back down. It came down like this. It got within maybe 20 cents, no, maybe a dollar or so of our entry, and then it moved away from there. We never got into that trade. Sometimes that happens. You know, you place a trade, it never happens. In fact, I would say that happens maybe a third to half the time. You know, if it's a really good movement to the upside and we're trying to get in on a pullback, sometimes those pullbacks don't happen if it continues that movement. So we missed out on this trade. Now, as we put it on, would have been around about this time. So again, I know that's a gigantic line, but hopefully that still makes sense. We put it on around about this time, and around about this time, the climate changed as price started to come down. As the climate changes, we would have cancelled that trade anyway. Now, so that means as it comes down again, if it does come down again, it may still be valid. It may still be an upwards climate. We may still have the EMA on our side. Doubtful. So we would want to cancel this trade anyway. So we haven't been filled on it yet, but we're going to want to make sure that we cancel it because it's unlikely to be lining up in the way that we want it to. We're likely to be going in against the climate if we do get in at this point, and it's unlikely to line up with the EMA. So for those of you that follow our methodology, hopefully that makes sense, what I just said. If it doesn't, then don't worry, I will explain it more as we go through for new opportunities. So that was the one that we did live in the YouTube session. And we also looked at this one in the closed session, and I believe similar thing happened here. So yep, similar thing happened there. Of course, it would have been great to get in on that trade. Let me just see when that was put on. So 2 weeks ago from today would have been to minus 14. Yeah, so we missed this trade. So we would have put it on. Yeah, we would have put it on around about the 9th. So here-ish, yeah. So unfortunately, we missed that first entry into this area. That would have been a great one to have been a part of, but we put it on after it had already hit to get in on a second go, and we didn't quite get that second go. So same situation, price has moved up from there quite far away on its way down. It's now changed its climate. It's now a red climate. It's unconfirmed. By the time it would get here, you'd either still have an unconfirmed climate or a fully downwards climate. We don't want to be going against the grain, as it were, so we would just cancel that. So same thing here, we're cancelling that trade. Now again, just to say, because of course these sessions are 2 weeks apart, in that meantime, of course, things can happen on these stocks. So a little bit of a tip for trade management. Keep an eye on the climate. If the climate changes, we got into that trade, or we placed that trade because we had a confirmed upwards climate round about here. If the climate is no longer confirmed, then it removes one of the reasons that we got into the trade. So therefore, we cancel the trade. That could also be true of if you're already in the trade. If we were to be triggered on that trade and it was to be going off in our direction, and then suddenly the climate changes, we may want to get out of that trade. So a climate change, and I don't mean global warming in this case, but the auto climate, if that changes from thick blue or thick red to anything other than those, the one that we were using to get in the first place, better to cancel our trades. That's what we'd rather do. It's more conservative, yes, but it's going to keep you safer, and it's going to hopefully mean that you don't end up with something really going badly against you. Okay, so now that we've looked at those trades that we did last time, let's have a quick look at our economic calendar so that we can see types of markets that we might want to keep out of or just be aware of some volatility. So what I'm going to do here, I've gone to fxstreet.com/economic-calendar. I'm going to filter by high impact news and the US markets. Now the reason that we're doing that is because we're looking at US stocks. Of course, if you're going to be trading stocks in Europe or Asia or wherever else you are in the world, then you might filter by other countries. The ones that we're looking through are US stocks, and the reason for that is because they tend to be, or they definitely are, a lot more volume going through those markets. So we can see here that we don't have anything going on today, and nothing really next week. In fact, let's do this from today till an actual week from now. So starting there and ending there. So there we go. Okay, so we can see on Monday, 12:30 That's GMT. So I'm just going to change it to Eastern Standard so it makes sense in terms of GMT minus 5 it should be. Although for some reason I can't scroll. Okay, in which case, well, this is in GMT, so minus 5 for New York. So this means 7:30 a.m. New York time, we would be getting news out on Monday at, that would be 1 p.m. and then 1:30 p.m. New York time on Wednesday, and then once again 7:30 a.m. On Thursday, that we would have news coming out that could create high volatility because it's high impact news. Now, these are scheduled reports that are expected to have an impact on the markets. Sometimes they don't have an impact on the markets. And sometimes, of course, as we know in this crazy world, sometimes things happen that were completely unexpected that also increase volatility. Now, for us, it's just something to be aware of, that perhaps if we place a trade today, if we get triggered today, we might want to look at it Monday morning and just see what's going on. And just see if there's been some volatility, if maybe we want to reduce our position size, that might be something that we do, or something like that, so that we protect ourselves and we keep ourselves safe in an environment where we might see volatility. You might be somebody that absolutely loves volatility and you would rather be trading around those times because you want to catch bigger moves, because it normally means that the prices move more. Also means that they can quickly move against you. So pros and cons, it's up to you to decide how you feel about volatility, because it's going to decide how you feel about risk, but be aware of it, and you can use these kind of economic calendars to help you with that. Okay, so now what we'll do, let's go to TradeStation, and we'll have a quick look here as to what we have going on. So let's first look at the S&P in general, so the ES. Now I'm looking here using a daily chart for my AutoClimate and a 55-minute chart for our AutoUFOs. 55 might sound like a random number. It's not. It's there for a reason. It's slightly off from what everybody else uses, and it's using Fibonacci numbers because they tend to have higher probability. Now, I'll just hopefully prove that point here. Sometimes it doesn't quite do that on a specific stock on a specific time frame, but we see this number here. This number tells us the probability, or the amount of time as a percentage that price moves between UFOs. Those UFOs could be 1 to 1 away, 10 to 1 away, 5 to 1 away, but it's the amount of times it moves between them. So essentially tells us a probability rate. If you don't know what UFOs are, don't worry, I'm going to explain that in a minute. So that's on a 55-minute chart. If we change this, if we change this to be a 60-minute chart, that number should change. And see, it's gone down. So it's gone down from 54.96%, I think it was, to 50.72%. Doesn't make a huge difference, but big enough difference for me. I want to make sure I've got as many probabilities on my side. So we use these off time frames for a reason. Now we're using daily and 55, which those two combinations of time frames usually mean this would be like shorter term swing trading. We'd expect trades to last for perhaps a few hours, maybe a few days. And we'll also look at other time frames as well if we don't see anything line up. Now, with this, it's quite interesting at the moment because the S&P has been going up, or it was going up, basically consistently for a few weeks, beyond what normally happens in terms of a movement to the upside on that time frame. But we now see this little red dot. You might not be able to see that. It's very small and next to a very giant arrow. But what that little red dot tells us, and you just have to trust me that it's a little red dot, is that there are not enough probabilities now. Not enough probabilities to the upside nor the downside. We want to make sure when we trade, again, it's going to be gigantic text, I think, that the first question we ask is, should I buy, sell, or do nothing? It's the first question we should ask. We don't just want to go in and figure out where we should buy and sell if we don't know that we have probabilities to either do one of those things. We want to know, do I have probabilities to the upside, therefore buying is a good idea? Do I have probabilities to the downside, meaning selling is a good idea? Or do I have neither probabilities lining up, in which case doing nothing is the best idea? Don't place trades for the sake of filling time or for the sake of placing them. Place them only when you have enough probabilities on your side to justify the risk of your time and money. So we want to know where those probabilities lie, up, down, or nowhere, which is why we use our AutoClimate. If I just make this big for now, and I'll just show you what we mean. This might look, again, for those that might be newer to trading, it might look a little bit crazy. Don't worry, ignore that. Just focus on these dots down here, okay? Ignore the lines for now. Those dots just tell us where we have the probabilities. So it's either a thick blue dot, like one of these, that tells us probability to the upside. Could be a thick red dot, like one of these, tells us probability to the downside. Or it could be a thin dot of either colour, like there, or like we have right now. And that tells us no probabilities either way, do nothing. So we're just using different coloured dots and the thicknesses to tell us where the probabilities lie. We're letting technology, an app, run through the system, run through the charts and come back and tell us in a very easy to understand way, it's either thick blue, thick red or thin of either, to decide whether or not we place a trade. Now we use this on the bigger of the two time frames. So this is the daily chart that we're using this on, so that we can figure out on the bigger of the two time frames, where do we have most probability? Where do we have probability up or down or nowhere? Now in the case of the S&P as a whole at the moment, the S&P being a basket of the top 500 US stocks, we have an undecided market climate. It doesn't really know what it's doing. If it doesn't really know what it's doing, we probably shouldn't be trading the index itself, and it might mean that it's harder to find stocks within that index that have probabilities one way or the other. Now, I ran a scan just before we started this, so let's see. Okay, there we go, point proved. I ran a scan for these time frames to show me where we have probabilities to the upside, which stocks have probability to the upside that are obviously within these baskets of stocks, and we have one. Now, sometimes you might run this and there might be 25 that you can choose from. Now, the reason we won't run these scans, and don't worry, we will, if you guys let me know in the chat, if you have any stocks that in particular that you want to make sure that we look at, I can go look at them, no problem, and talk you through where we might trade them, when we might trade them, why we might trade them. We can do that. But the reason I start with the scans is because it's objective. The scan, if I show you here, the scan is looking through data to come back and show me which stocks fit that criteria. So it doesn't matter what their CEO said. It doesn't matter about their, what's going on with their business. What matters is where are the probabilities based on different criteria for that stock to either continue to go up or go down. So for example, we want to know that it hits a certain price. If you trade stocks that are too cheap, normally we want to make sure that we're trading stocks that the big boys are trading, banks and institutions, because they're the ones that are going to move the prices of things. And our AutoUFO app helps us identify more or less where they're likely to be getting in or out. So we want to be trading stocks that are more expensive because they're more likely to be traded by banks and institutions. If it's a penny stock, it's unlikely that a bank or institution that has millions of billions of dollars are going to be trading that penny stock, right? Otherwise it would be more expensive by default. So we want to trade stocks that are over a certain price. We want them to have over a certain amount of volume. We want them to, with options, again, we can use options information to help us make sure that we're hitting certain criteria there. We want to make sure that it's over our EMA, and we want to make sure, again, that we have other criteria lining up. By the way, if you want these scans, you can just email us. So support@traddictiv.com, email us, and we will send you these scans so you can import them into your own TradeStation and use them. So I ran this scan just before we started, and this is what we're left with. I believe it's in the video. There we go. So let's have a look here, see what we have. If not, maybe we'll look through some different stocks that may not have fit exactly that criteria, but that might still have enough probabilities. Essentially, that scan is running through all of the thousands of stocks that you could look at and coming back and showing you where you would have the highest probability. Not always to say that we couldn't look at other things and find decent opportunities. So in this case, we have straight away an unconfirmed climate. Let me just make sure we're definitely looking at the right chart here. Let's just move price. Yeah, so we have an unconfirmed climate, which means we keep away from that. It may have probabilities and other things, but that's not what we care about. We want to make sure that we are trading things that have probability there to the upside based on the climate, and we don't see that. Now we could now have a look and see if we have probability to the downside. And this one, I run the same scan. We have Netflix. Now with Netflix, we have a thick red dot. That tells us probability to the downside, which means we should be looking to sell or go short. Now we now have another issue as to whether or not we actually do get into a trade on this one. And the main reason being is because just because the climate says we should look to short doesn't mean we just press sell or whatever the price is now. Whatever the price is now is extremely subjective because it depends on the exact second that you happen to be looking at the chart. What are the chances that the best time to buy or sell something is the time that you happen to be free looking at it? That's subjective. We want to get in and out of our trades objectively, which is where our UFOs come in. So UFOs stand for unfilled orders. Essentially in the markets, we have stacks of buy orders, stacks of sell orders. Buy orders push the price up, sell orders push the price down. If we have more sell orders than buy orders, it goes down. If we have more buy orders than sell orders, it goes up. Now, why is it helpful to know where unfilled orders are? Because, let's take this one. Let's change the colour to be clear here. This one is showing us where we have sell orders in the market. Why do we care? Because if price were to come up and hit, let's say, comes up to here, and hit where the stack of sell orders is, it's showing us where the prices are. It's come into a big stack of sell orders, which means there's a lot of selling now going on. If we're going to sell something, we want to make sure we sell where there's lots of other selling going on. Because if there's lots of other selling going on, it's more likely to beat the buyers and push price down. And if we're selling, we want price to go down. Same the reverse. If we're buying, we want to buy where there's loads of buy orders because it's more likely to beat the sell orders and push price up. So if we're going to sell, where do we sell? If we're going to buy, where do we buy? That's question number 2. Now, we can use our UFOs, great. The issue with this particular market right now is that the closest sell UFO, because we had this huge gap in price, a lot of pressure to the downside there from that UFO, it was so strong, so many sell orders, that it pushed price to jump $5, which is quite a big jump there. So the closest stack of sell orders is now $45 away. It's a big jump. Oh, when I said $5, I meant $50. Yes, $50. That was a pretty big jump on a stock there, especially considering its price. I guess that's around about 8%-ish that it would have dropped by. So we're a good $48 now away from where our entry would be, which means by the time price comes up, most probably our climate will have changed. It's now going to have momentum to the upside. It's going to have buying pressure to the upside, which means, yes, we come into a stack of sell orders with much buying. So we're now 2 competing forces going against each other. We don't want to do that. We want to keep out of that. We want as many things to line up as possible. So for that reason, we wouldn't be actually taking this trade or taking this further. Now we've run the scans and we actually only have 2 different stocks to look at. So I guess what we'll do, I think I ran scans on bigger timeframes as well. And no symbols met the criteria. That's interesting. I think it has a lot to do with the fact that the S&P itself is undecided at the moment, which means the scans are coming back to say, yeah, a lot of the stocks within it are also undecided. We don't want to be looking at stocks that are undecided. So I'll tell you what we'll do. Well, let's just cycle through. We'll put in different stocks, different symbols. We'll see what we find. This might be one of those days where we don't find an opportunity, in which case we'll keep going right until the end of the session. There's no point keeping on going if we can't find anything, so we'd close off the session for everybody. But hopefully we'll find something as we cycle through. You guys let me know on the chat if there's any particular stock that you want to look at, if there's any particular, maybe ETF as well that you want to look at, and we can look at those things. Now let's have a quick look perhaps at our ETFs. I'm not sure that we have them here. Those are currencies. So let's have a look, for example, at the Qs. So an ETF, by the way, is an exchange traded fund. It's normally a basket of stocks, or it could be a basket of ETFs can represent commodities and things as well. But they are basically funds that trade as stocks, which means they're groups of investments, groups of stocks, groups of businesses that trade as a single stock, which means rather than you buying every stock within the S&P 500, that's 500 stocks times however much they cost per stock, that's a lot of money, you can buy one share of the S&P, which if we bring that up, SPY, that represents the entire thing. So you're in all of those stocks without being in all of those stocks, essentially. Now, no surprise here, I've just looked at the NASDAQ and the S&P as ETFs, and each one has had an undecided climate. Again, we keep out of undecided climates. No point placing trades for the sake of filling time if it's not going to work out for you, or if it doesn't have probabilities that it could at least do okay for you. Pointless. Waste the time, waste the money. So that's the Qs and the SPY. Let's look at, oh no, that would be the futures contract. Let's have a look at the futures contract for that, for the Dow. Probably going to be the same thing. Yep, same thing. Thin red dot, which means not enough probabilities either way. Perhaps looking at the ETFs that represent these stock markets are going to produce similar results because they're all tracking a group of stocks, and oftentimes the same stocks are in multiple ETFs, multiple funds. So maybe we'll try and look at individual stocks. What we might want to do, and to just change it up a little bit, is look at smaller time frames. So I'll tell you what we'll do. Let's have a 240-minute down here. There we go, and we will then have a 21-minute up here. These are now going to be shorter term trades that will have durations normally that are going to be less. So if you've got a 240-minute climate, 21-minute for your UFOs that you're likely to be looking at, you know, maybe a couple of hours, maybe a day, maybe that you're in a trade, but it's going to be more short term. So let's take a quick look, see what we can see on our smaller time frames, and see if our climates are a little bit different. So let's go to let's perhaps look at the ETFs, the S&P. Let's look at this one here. Again, that's got, even on this time frame, undecided. Let's go to the Qs again. Undecided diamonds. Undecided. Okay, let's go to individual stocks. So Facebook. I'm just thinking of them off the top of my head, guys. So okay, we've got HD. Thank you, Femin, for that suggestion. Let's quickly just check in what the EMA is here. 301.15, already passed that. Okay, so HD, you said. What time frames would you like us to look at there, Femin? Would you like daily and 55, weekly 144? The smaller time frames that we're looking at now. Let me know what time frames you want to look at, and we can of course take a look at those time frames. For the time being on this one, we actually have no probabilities on this time frame, so we can change it. We'll go up and down time frames and see what we can find. In the meantime, like I said, let me know in the chat which time frames you would prefer to look at, or which ones that you're thinking of. So just to show you, on the 240-minute and on the daily so far, we've had this thin red dot, which tells us not enough probabilities either way. We don't place trades for the sake of filling time. We place trades because they're probable to work for us. So the daily and the 55 has not shown up anything. Let's have a look at the weekly. Lots of indecision going on here in the market. So with the weekly, which then would correlate with the 144-minute, what we're seeing here is that we have a thick blue dot. Okay, so we just said daily and hourly. So we checked daily and that didn't have probability, so we'll go to an hourly. I'll just explain this on this bit, and maybe if we don't find anything on the hourly, we'll come back to the weekly, because it may look like we might have an opportunity there, but remains to be seen. Let's have a look. So with this one, it's a thick blue dot. So on the weekly chart, we have a thick blue dot, probability to the upside, which means on the 144-minute chart, we would be looking for a buying opportunity, because we have the green light, as it were, from the auto climate to even continue with the next stages. Just to show you again, when we go to daily, which then correlates with 55 minutes, with this one, we had a thin red dot. Because it's thin, not enough probabilities, keep away from it, not worth it. So now let's look at a 60-minute, as Furman suggested, which is the hourly. Unfortunately, not quite lining up there as well. So hourly would correlate with the 8-minute chart. Now the issue here again, it's thin, it's blue. The color doesn't matter. If it's thin, not enough probabilities, don't worry about it. Don't do it. Don't get into a trade where you don't have probabilities. You want to get into a trade where, statistically speaking, the technology is saying you have probabilities enough to at least look at this. if it's not even saying we have enough probabilities to at least look at it, everything else is irrelevant from them. So apologies there for running on the time frames that you wanted to look at. It just so happens that there's not much going on, bit of indecision. So if it's okay with you, I'm going to go back up to the weekly and the 144, because at least we had a confirmed auto climate there, and we can maybe do a little bit of analysis here and see if it would work out with this one. If not, if you have any other markets you want to look at, any other stock suggestions, then we can look at those again on different time frames, see what we can find. So when it comes to this one, we have thick blue dot, probability to the upside. We have permission to look to go long, so that's great. Sustainability stats, for those that know what that means. Usually this market would go up for 8 candles. I know that says 7.11, round it up, because you can't have 0.11 of a candle, so we're going to round that up to the next full candle, which is 8 candles. So usually goes up for 8 candles, and we're currently on candle number 6, which tells us, based on what normally happens, each of those candles is worth a week. Normally goes up for 8 weeks. It's currently been going up for 6 weeks. So we have probability, based on what usually happens, that it will also continue for the next couple of weeks based on the usual processes. Of course, we can fall short of what normally happens and things change. We can go past what normally happens before things change. That's where we get this average in the middle and where the statistics tell us. But we still want to use that to kind of go in our favour. So this is going in our favour so far. Probability to the upside and sustainability on our side as well. We also have a whole bunch of green UFOs, whole bunch of buy orders that we could choose from to take. Now, this is where an extra element comes in, which is we want to place a trade with a UFO, whichever one of these, that also aligns with the EMA from our bigger time frame. Now, why am I saying that? That might be something that seems a little bit like, oh, come on, you're adding another thing in here. We want to place trades, right? We do it for a reason. If you just place trades at UFOs, and there's nothing wrong with doing that, you'll have a lot more opportunities, a lot more trades that you could be in, but they'll have less probability. Because at UFOs, let's take this first one as an example, there's buy orders there. Now, the EMA on the bigger time frame, when price hits the EMA, buy orders are likely to come in. So you've got buy orders, in this case, 304 round about here, call it. If that one's 303.89, then I guess it's just within this UFO, the second one here. So as price comes down, if it hits that EMA number, a lot of times it tends to push price up. If price was below the EMA, it would come up, hit the EMA and go down. So in this case, because we're above the EMA, we would expect buy orders to come in when price hits the EMA. By the way, EMA, for those that might not know, exponential moving average. So it's a moving average, meaning as price moves, this average moves, right? Because it's taking an average of the last, in this case, 9 candles and giving us an average of them. Now, it's exponential because it's putting more weight on the recent candles than it is on the ones earlier on in that cycle. So it's useful because a lot of people around the world trade using EMAs as their entry price, including funds will also use EMAs as their entry price. So at the EMA, we would expect buy orders to come in. And at UFOs, we expect buy orders to come in. Surely the highest probability is when those two things coincide. When you have buy orders from one side for whatever reason, buy orders from another side based on a common strategy, 2 sets of buy orders now that are coming in for different reasons at the same price. If we buy there, we have a lot more probability of price moving up from that point, which is what we want as buyers. You could just use one or the other, just buy at the EMA or just buy at UFOs. But with that, you've only got one of those two components. So you lose probability, but you increase opportunity. And that is something that is ultimately up to the individual depending on how they want to balance those two things. For us, we want to make sure that they coincide. So if we just get a line on this chart, let's just put a horizontal line in. I'm going to double click it and type over with the data. So we now have the EMA has moved, as it should do, to 304.03. So where that green line is, maybe let's change the color, make it a little bit easier to see amongst the other green that we have. I don't know, let's make it purple and let's make it a little bit thicker. There we go. Cool. So where that purple line is where the EMA value is. It's just within, if I spread this out, you'll see a little bit easier, literally just within that UFO there. Now, unfortunately, and sorry Furman if it's not lining up for this particular stock, for the one that you suggested. The issue with this is that yes, at the moment it lines up. However, it's a moving average, right? So that means as price moves down, so too will the average, which means it's likely for them to meet up. If price were to fall, even if it fell very quickly, they're likely to meet up round about here. They may meet up at this UFO, but it's too far away for us to really judge that. But it's very fair to say that if price moves down even a little bit, the EMA is going to move down and therefore not line up with that UFO, which is unfortunate, but we need to be strict with our rules. Now it may be, let's say that price sort of comes down, goes up a little bit, comes down, goes up a little bit. Perhaps the EMA starts to, come closer to price if price doesn't really go anywhere. And then perhaps they line up at this UFO. But at the moment, the EMA is nowhere near that top UFO. And if price were to move to meet the EMA would move down and therefore outside of the UFO. So hopefully that makes sense. Just going to check there. Does the 43.64% mean anything with stocks? Yes. So let me just explain that. So this number, if I just show you here, if you have the UFOs on TradeStation, this isn't a function on the TradingView version of the UFOs, only on the TradeStation version. If you double click on any one of the UFOs and click yes, you'll see this kind of menu comes up. So I'm on the Inputs tab, just in case it comes up with another tab if you've changed styles or colors or anything before. So it's on the Input tab. And see here where it says Show UFO Stats? I've changed that to true. So this is how you get that number. So let's say if I put false, you'll see that number disappear. Okay? So if I put it back on again, it may not be there by default, depends what you've got set up, but you can change it very easily. Double click on the UFO and you can come to true. Now, the UFO stats for anything, so for this one, this is on the 144 minute of Home Depot. So it's a specific time frame for a specific stock for a specific period of time. So if I just show you here, the amount of bars that I have loaded on the chart is 500. If I was to change that, this number would be different. I'll explain why. This number is taking the data that it has on the chart and saying this percentage of the time price moved between UFOs, meaning hit a green UFO, then hit a red UFO, hit a red UFO, and then hit a green UFO. So it's essentially telling us the probability rate of these UFOs. Now, a probability rate by itself doesn't necessarily equal profitability. Those are two separate things. Because let's do a little mini lesson here, considering it's not as if we're flooded with opportunities at the moment today. Let's take this and be a little bit more theoretical. So if we have, I'm just going to round that down to 40% just to be easy. Let's say we have 10 trades. 4 of them win, 6 of them lose. Now you may think, well, that means I'm going to lose money. And it may do. But let's say for the 4 that win, change the colour of this to green. For the 4 that win, you make $50. And for the 4 that lose, you lose $10. So overall with this one, 4 times $50, you've made 200. And with this one, 6 times minus 10, you've lost $60. Overall, you're in profit by, let me go back to this card. Overall, you'd be in profit by $140. So even though you were only right 40% of the time, 4 times out of 6, because you made more when you were right and you lost less when you were wrong, you still make money. So this number doesn't necessarily mean profitability, it means probability, the amount of times that those UFOs work, essentially. And work is defined by moves to another UFO. Now, this is assuming you don't apply any other methodology. So if you just blindly took all the UFOs, regardless of climate, regardless of EMA, regardless of any other variables that you want to add to this, 43% of the time they would work. So that's the base that you have. Add climate to add to your probabilities, add EMA to add to your probabilities, add potentially any other variables that you want to add, fundamentals, round numbers, other indicators that you want to use, and that number just goes up and up and up from there. So this is the minimum probability number based on if you just randomly took the UFOs wherever they were, regardless of anything else. So hopefully that makes sense as to what that 43.64% means. It means for Home Depot on this time frame, for that amount of data that's loaded, that's our baseline probability. By the way, not to say that that means probability at 5 to 1. That was an example. It could be probability at 1 to 1, 2 to 1, 3 to 1, 10 to 1, 6 to 1, because the UFOs are, all over the place. These stacks of orders are not at set ratios from each other. They're everywhere depending on where we have big stacks of buy and sell orders. It could be 43% at 1 to 1, in which case, you would lose money. If it's 43% at 2 to 1, averagely, then you would make money. So hopefully that makes sense as an explanation there, Furman. Let me know. So I'm just going to show you the point here. So if we change this to a different time frame, let's say 240. So that number's changed. It's now 53%. So normally the off numbers that we use have a higher probability. In this case, 240-minute chart actually had a higher probability. So you might want to use that. Because if your baseline probability has gone up and you're now going to add in climate and EMA, well, then you've got an even greater probability of that working out for you. If we change it to a 60-minute chart, again, 50.62. If we change it to, you could, 77 minutes, make it up, 38%, right? So the changing variables will change that number. So how do you make this consistent? Either stick to the same time frames every time, or maybe check between two to see which one of the two has the highest time frame, has the highest probability before you start going down that route and looking at different trades or different opportunities. And make sure that you load the same amount of bars every time. So this is on a default. So I'm loading 500 bars every time I change a time frame, every time I change a market. Doesn't matter, it's loading 500 bars. So 500 candles, as it were. Because that way it's consistent. That way it's the same every time. I'm looking at the same amount of data every time before it gives me that number. If you load years and years and years, you'll get different numbers. So let's say, for example, if I change this to 1,000, so this number was 43.64. If I change it to 1,000 and click OK, it's going to take a while to load. You see this pending data thing in the top left-hand corner? It's going to take a while to load because it's loading more data, and it's changed to 45.81%. So with twice as much data, it's changed by a couple of percentage. So be consistent every time. For me, it's always 500. Because that's a reasonable amount, so it doesn't take ages to load. It doesn't stress my computer out loading all of that, but it's enough to still make a point that this is a reasonable statistic to go on. So hopefully that makes sense. Let me come there to the chart here. I don't see that same feature on TradingView. Is it there? No. So this only exists on the TradeStation version. That's one of the reasons why the TradeStation version is more expensive, because it comes with more features. So the TradeStation version is $89 a month, and the TradingView one is $34 a month. And that's one of the reasons why, because you have these extra functions. Now, it doesn't matter so much because, like I said, this is a base probability. So we're adding in climate, EMAs, and the UFOs by themselves, and we're also going to manage our risk and stage our targets. So we're adding many variables here to increase probabilities anyway, whatever that base is. So if you have TradeStation, or you can open a TradeStation account cheaply and easily, then yeah, it's a great additional tool, but it's not fundamental. You don't have to use that in order for this to be a good idea, or in order for you to know what to trade, or what stocks to trade, or what timeframes to be on. You're adding enough probabilities elsewhere for it to more likely work out for you. So it's not too big a deal. If you stick with TradingView and you never use this feature, it's not the end of the world. So hopefully that makes sense. So thanks for that. Took me down a theoretical sort of rabbit hole here whilst we were looking for opportunities. By the looks of it, I'm going to run this scan one more time, see if anything's changed. It will take a couple of minutes to load. So whilst we do that, let's check out another couple of stocks. Let's go back. Let's stick on a weekly actually, because that's the only time frame we seem to have probability on so far. And let's have a look at Google, for example. Again, if you've got any other examples of stocks you want to look at, just let me know in the chat and we will have a look. So with Google, we have probability to the upside with our auto climate. We're a little bit overextended, or we're actually quite a bit overextended. But let's just see if we have an opportunity here so we can get at least one trade on before we go. No, we don't. So the reason for this, yes, probability to the upside with our auto climate, but our EMA is 2156, which is like here. So if we just extend that out, it's in the middle of nowhere. As price comes down, yes, the EMA may move and line up with this one, but by the time it's moved down that much, we may see a change in climate. So we'll rule that out. Let's look at Verizon. I'll look to that in a little while. So it's because I'm running the scan now. My computer's struggling a bit to process all of this. Here we go. So with this one, again, probability to the upside, but again, UFOs and EMA not lining up. Let's look. It's on mobile. And again, let me know anything else. I'll keep checking the chat, see if you've got any other suggestions. It may be, like I said, this is going to be one of those sessions where we go to the end. Everybody has access right the way through because we don't find a trade to put on. It's the nature of the markets, unfortunately, or fortunately. Better not to put a trade on if we don't have probabilities. With this one, same situation, probability to the upside, but EMA and UFOs not lining up. Let's think Tesla. I'm just thinking off the top of my head here whilst that scan is going, rather than sit here silently and wait for that to take a few minutes. So let's have a look. Tesla. Okay, probability to the upside, 701 again. So we have probability to the upside there, and it's also the first candle out of usually 8, so that's good. Now 70102, this is basically where our EMA is right now. So again, if price were to move down, let's say the EMA also moved down to here, unlikely for them to meet at the same price that we have our UFO. So again, unfortunately, we'll have to move on. Let's look at AT&T. And we'll just cycle through stocks and I'll explain why we would or why we would not trade these opportunities. Now 30.11. Okay, we may have a trade here. Lovely. Woohoo! So that's good. We'll put one trade on and then we'll finish the session. So this is AT&T using a weekly chart as our top time frame and a 144-minute chart as our smaller time frame. So the symbol for it is T. That's AT&T. T is the symbol. Again, weekly and 144 are going to be sort of longer term swing trading. We'd expect trades to last for a couple of days to maybe a week or two. It could be sort of position trading, really, really short term investing as well. Obviously, it depends on the volatility of the markets, how quickly these go. So we have probability to the upside. Thick blue dot on our auto climate, we have permission to look to go long. We are slightly overextended on our climate based on what usually happens, but we still have our probabilities, so let's take a look there. Now the EMA is 30.11, which is somewhere in here, in the middle of this stack of UFOs. So what we're going to do is we're going to take that stack of UFOs and we're going to use them all together to be our trade. Now, what I'm going to do firstly is actually come over to TradingView to finish this, just because most people, I think, use TradingView that follow us. So you've seen it on TradeStation, we've done TradeStation a lot, but hopefully now we can use TradingView to finish this. So we have the same 3 stacks of UFOs. It looks slightly different, but it's highlighting the same area. What I'm going to do is take a drawing tool. I have customized my Fibonacci retracements to use as a drawing tool. So even though it doesn't look like it should do as Fibonacci, don't worry, I literally just use it to help me draw. I don't use it for what it was intended. I'm just going to wrap my lines around these areas. The reason I'm doing that is because I want to have a really easy, identifiable visual thing to show me exactly where my entries and exits would be. Now let's go here to the 1 week and the 144. There we go. Brilliant. So the EMA right now on this one is actually 29.64, so it's slightly lower on TradingView than it is on TradeStation, but I'm pretty sure it's going to sink somewhere in here. Now it depends. If price moves really slowly down, then the EMA may move down and end up coming out of this. If price moves really quickly down, let's say it hits that sell UFO and does this, it's likely to line up. So we'll place this trade, and again, you would just monitor it. If it starts not to line up anymore, then you cancel the trade. If the climate changes by the time it enters the trade, cancel it. So you're still going to use the reasons why you would get into the trade. You're still going to use those to decide whether or not you cancel the trades if those variables change. So what I'm going to do here, I'm just going to double click on my lines, and I'm going to change my coordinates there so that it lines up. So the entry would be 30.16 because that's the top line of our top UFO. Our stop loss is going to be 29.21. Reason for that is because the lowest price in those stack of UFOs is 29.31, and I'm going to take 10 cents away just to give it a little bit of wiggle room. So that's my entry and my stop, 30.16 to 29.21, and it's encompassing a stack of UFOs that encompass the EMA at the moment. Now at the moment, the EMA is actually, oh yeah, it's 30.11, so that's great. So yeah, it's at the moment, the EMA is here-ish. So let's say price were to come down, the EMA is going to come down and still most probably line up within these stacks of UFOs. So happy days. Now let's go to the order panel. And again, this is where we're going to be taking some decisions that also help to keep probability on our side, at least probability not to lose, not necessarily probability to win. Now, with this one, we have a very big, what just happened there? Here we go. We have a very big move to the upside available based on the bigger time frame. Probably means we're going to end up managing this trade and getting out somewhere in between, but let's have a look. So I'm going to click buy. I'm going to put in my entry, which is 30.16. I'm going to go to stop loss, and I'm going to put in 29.21. So I'm risking 95 cents if I was to purchase one share, 95 cents. Now, I'm going to assume that we risk $100 in total on this trade. I do that because it's a nice round number. It's easy to split in half. It makes sense for most people, just what the numbers are. You could risk $2. You could risk 95 cents. You could risk thousands of dollars. It's up to you in terms of risk. This is just an example because it's easy to explain. So we're going to have two targets. So if we're risking $100 in total, each of those two targets needs to risk $50 because then together they make 100. So that means we're going to be trading 52 shares of this. And again, the trade value of that would mean that you would need about $1,500-ish, call it $1,600 in the account to be able to place that one half of the trade. So you're looking at $3,100, $3,200 in total to place the entire trade. If it was $100 risk in total, again, you can lower that depending on what you have in your account and what is best for you, or higher it, lower it or higher it, make it higher if you need to as well. Okay, so first things first, our safety target is 1 to 1 away. Safety target is there to keep us safe. So I'm just going to put a line on the chart here and just show you that. 31.11. Now I've used the tools on TradingView there to do the maths for me and work that out. So what we do this for is, let's say price comes down, it reacts to the UFO somewhere in here and it goes up a little bit. Maybe it gets up to here, but it doesn't get up to 41.26. That's going to be our final target. That's quite far away, right? And then it just comes against us. Well, that's okay because we took half of our position off here. So we didn't lose any money. We're going to have risked $100, made 50, which means our risk is now 50, and then lost 50. So it's 0. So we have the safety target to increase probability of break-even trades, to decrease probability of flat out losing trades. So if we see some form of movement, we at least break even as opposed to losing. That's why we do that. So all I did is I clicked take profit. It told me here, pips, in this case, it's just smallest movement of price, right? So 95 cents. So I've just said we'll take the profit 95 cents above that then. And then all I need to do is click buy. Now that's gone in. Now the second target, I do see your question there, by the way. We'll come back to that in a second. The second target, or our final target, is going to be all the way up here, because that's where we see on the bigger time frame where we have a stack of sell orders that could get in the way of the buy orders that are coming in from the climate, the buy orders that are coming in from the UFOs, the buy orders that are coming in from the EMA. Got lots of buying going on all around the same area, which is great. That's why we're buying. The only thing that can stop buying pushing price up is sell orders. And the sell orders are ages away on that bigger time frame. So that's going to be our final target. Now, more often than not, you'd see it might go up for a little bit and then new orders come in. So you'd get a new UFO, maybe something like that. That might come in, a stack of sell orders. That will push price down from there. So we're going to manage our trade as we go, but we'll put that final target in. So again, we're going to come to buy. The entry is 30.16. The stop loss, 29.21. And our profit target is going to be 41.26. We're going to risk $50 on this trade as well. So if and it is unlikely, if price came in, hit our stack of buy orders, and then just went to the moon from there, and just keep going up and up and up, and it hits our final target, we would make $50 on the first one and $577.20 on the second one. So overall, put those two together, 577 plus 50, $627 for a $100 risk. So it works out overall 6-ish to 1 trade. Even though the final target is 11 to 1, we're only taking half of our position the whole way there, which is why it's going to be round about 6 to 1 once you put those two together. And again, we will click buy. Now I'm just going to put a target in there on the to draw it, just because again I like to see that it's visually there on the chart. Makes it easier for me to see what's going on. So if I was to squish this right down, and again it's ages away, so I'm going to have to squish it quite a lot. And let's move price as well. So we can see our entry is here, this black line. Our stop loss is this red line. Safety target 1 to 1 away, and final target quite a way away. So that's one complete trade. I'm glad that we got it in the end. Again, the markets in general are being a little bit indecisive, not really sure what they're doing, which is why we didn't really see a lot of opportunities, because a lot of the stocks that we look at are within that basket of stocks. So if the basket of stocks is undecided, makes sense that the individual stocks within it are also undecided. I'm glad that we found one that did work out with our probabilities. Now let's just answer a couple of quick questions. So is there a way to set up the hourly directional scanner to scan weekly and daily? So does that mean, so if we go to the scan here, so these two, we have weekly and daily. These are for stocks. So are you asking if you can change that to scan 60-minute climates? Or we do have one that scans 60-minute climates, but that's for Forex. If I change that, I can customize that. So symbol universe, you could perhaps change the symbol universe. Yeah, okay. So I've never done that before. So the answer to that question, if it's coming from me, is I'm not sure if that's possible. But logically speaking, yes, I'm sure it is possible. So you can either, once you download these scans, if you already have them, you can change the Forex one if you're looking for day trading stock opportunities. This is using a 60-minute climate. Customize it, come to symbol universe, and change the symbol universe by selecting, oh, there you go. You could just select all stocks, there you go. So you can just change the symbol universe and it's already set up there to do your 60-minute climate. So that might be a way to do that. Hopefully that was your question. I think I interpreted it properly, but let me know if I didn't. Just to reiterate on that, in case it was a little bit confusing and I went through a bit quickly. Once you download the scans, you'll have all of these. Some of them are for futures, some of them are for Forex, some of them are for stocks. The stocks ones are pre-programmed to be weekly and daily. So if you want to use smaller time frames, you could customize some of the other ones and change it to stocks. So go to the Forex one that says 60, if that's the one that you want for your 60-minute climates. You can uncheck under symbol universe the forex pairs that are there, and you could add all stocks or stocks that trade within a specific exchange if you wanted to do that. And then that way you know that it's scanning the right thing. Okay, so I need to click that again so that it saves. So you can play about with that. If you already have TradeStation and you have the scans, by the way, Furman, you can use the AutoUFOs as well, if you do have that, to get this number, if that would help you out as well. Again, not crucial. You're adding a lot of probabilities anyway, but once you've got that, if you do have it, then it's an extra variable that you can use that can help. Okay, so I have taken a lot longer than I intended. We normally make these 45 minutes to sort of 55 minutes. So I've gone over by 10-15 minutes. Hopefully this was helpful. I know we spent a lot of time faffing about and not really getting a lot of opportunity there. It's the nature of the market sometimes. You know, you're going to have opportunities galore some days where you're going to have loads to do and you have to pick between them based on your risk tolerance. And sometimes you're going to have one or two that come back on a scan, and you're going to have to go and search manually on different time frames and figure if you can find something that suits your trade plan. So I'm glad that we got this one in. We got through to the end on YouTube. So I'm just seeing there from Furman. So you meant stocks daily scanner to weekly or 60-minute. Yeah, exactly. So what I'm saying is that you can do that by changing the Forex 60-minute one to the stock to stocks, and it will do that process for you. I'm not sure if I just go to the directional daily one. I'm not sure how you could change the time frame here. I'm sure it's possible. I can't see any easy way to change the time frame there. I think it's pre-programmed into it. So it'd be easier for you to pick the Forex one for the 60-minute and change it to look at stocks, as opposed to changing the time frame of the stocks one, if that makes sense. Hopefully that makes sense. If not, if you email support@traddictiv.com, if there is a way to do it the other way around, then they'll know and they'll be able to tell you. But hopefully the way I suggested will also work. So try that, email us, let us know, and we'll help you. If I didn't help you, then they definitely can. Okay, so I will see you guys next time. Be a couple of weeks by the next one. So be careful in the markets, manage your risk, check your variables, test stuff. Any questions, any confusions, anything that you want to go through, you can email us, support@traddictiv.com. We're always happy to help. And you can get me on tradewithufos.com/Becky as well. You can ask questions there publicly so that we can answer publicly and everybody else learns from it. So I'll leave you for now. It's Friday, depending on where you are in the world, Friday evening, Friday afternoon. I will let you carry on with your Friday. Have a great weekend, guys, and I'll see you next time.